Unfortunately, Westgold considers that the proposal's confidentiality has now been compromised, as evidenced by yesterday's Musgrave share trading volumes, which were approximately 6.6 times higher than the average 12-month daily share price turnover. Musgrave released no ASX announcement. The gold price was lower and Western Australia had a public holiday.
If they like this thing, well, there's nothing stopping them from coming in over the top, but we'll just run our own race on this thing, do the work, and if someone wants to pay more for it, well then that's how it'll fall.
G'day Money Miners, 6th of June, Tuesday, because we had a bloody public holiday yesterday. We miss out on next week's public holiday, the King's birthday, because we had this one.
We miss out on it.
It's not included for WA.
We agreed we would take all public holidays, East Coast, West Coast, and you actually said you want some American ones too. So
yes.
I think we just rule out 4th of July while we're at it, Matty.
It depends, because Travis Ricciardo, we finally have a new M&A deal to talk about.
Oh, it's about bloody time.
And I think the Money Miners are going to be very happy about this, that we're not talking about those 9 letters. SBM, SLR, even so some of the same letters.
Mate, this one's a bit prophetic.
GMD.
You predicted this one on the
I
chat with
predict it?
Keeney on Friday.
Ooh,
Well,
did Keeney predict it?
I'm going to give you credit. So you brought it up. It wasn't like a fair prediction, but it was definitely, talking this theme.
One
and
next
you
on the
mentioned this
cards.
area, and even some Twitter folks were talking about the deal potential before it happened.
Yes. Well, let's go over what's happened. So Westgold, WGX, have put in an off-market takeover offer for Musgrave.
Oh, yeah.
MGV.
Correct, yep.
He's put the pressure on me there. Now, bit of high volume trading in Musgrave yesterday afternoon. As I said, WA was a public holiday, but the East Coast was open, so the markets were open. High volume trading, and now Westgold have put out their off-market takeover offer in this morning's announcement. So all scrip deal, 1 Westgold share for every 5.37 Musgrave shares. So it's an implied value of 30 cents a share for Musgrave. So they were trading in at about, I think it was 21 yesterday. Then they went up late in the afternoon, high volume trades, and they've gone up again a bit more today. So plenty to talk about here, Trav, because this is the first offer. And for the money miners out there, get excited. We're going to give our take, and then we've got the main man coming on to finish it off, Wayne Bramwell.
Yeah, it works out well. We get
MD of Westgold is coming on.
We get to have our bit analysing it, and then Wayne
he doesn't get to listen to it.
Doesn't get to watch it or listen to it or rebut to it, but he gets to add a bit more colour, which is going to be really, really good. I mean, we're in the middle of a live M&A transaction, one in which it's not yet recommended by board, so you don't call it hostile, but it's sort of it's in along the spectrum of hostile M&A. And you get an MDs come on the show to talk and break it down live. I think this is the future of M&A, Matty, and I'm pretty excited about it.
Yeah, right. Now let's go over, I guess, first a quick snapshot on Musgrave. So Musgrave, they're just south of the Westgold's Big Bell operations, Tuckabianna Mill.
Yep.
So it's in that little close proximity. So
correct, yep.
Now they put out a PFS just recently. So it's a high grade resource. Now they've only got a resource and they haven't got a reserve. So we'll go into that as well. So bit of a sort of a snatch and grab sort of thing. An initial 5-year mine life for 337,000 ounces total.
Yeah, as a PFS for stage 1, and they're going to do a stage 2 PFS a bit later.
Yeah, so this PFS only takes into account the indicated component of the resource, because you can't include inferred in a PFS. So look, they've got their resource. It is a high grade resource. So for the high grade section, 500,000 tonne at 12.5 grams is indicated. So total is nearly 1 million tonne at 10.4 grams. So high grade resource, but
you look at the head grade that goes through the mill there, and it's a bit different, right?
Yeah, and as we said, like a lot of the drill hole intersections are like 2 to 3 meters.
Yeah.
So once you convert this resource into a reserve,
Just mineable shape.
mineable shape,
Yeah.
things may change. So there's one aspect. So there's 6 pits there.
Yep.
There's the high grade underground, high stripping ratio, but I think it was 15.7.
Yep.
So it does have a high stripping ratio, but I guess that's the Musgrave side. Now onto the Westgold side. Rationale, the PFS put out based on Musgrave building a mill.
Correct. But they don't need to because they're bloody in a
Bloody
mill-rich area.
152 mills in that region.
There's plenty of mills there.
Yeah. So look, it's the Rationale. It saves $70 million on constructing the mill. So Westgold have got their 1.4 million ton Tuckabianna mill. So that's 40 k's away.
Yeah. Yeah.
And then that is 40 k's from the Q project. The Musgrave's called. So the Tuckabianna is what Big Bell feeds into, and Great Fingal, which will be feeding into. And then
I wouldn't rule out them trucking it to Bluebird. At least some of it to Bluebird as well, because
well, we did hear that in the investor call today.
Exactly.
Yeah.
If they can save some capital on Tuckabianna, then they can also truck it to Bluebird too.
Yeah, because Wayne said in the was it an investor call or just a
webcast? Yeah.
Webcast, yeah, that because of the grade, it does give them the optionality to truck some to Bluebird as well. It's not a definite scratch through that it has to go to Tuckabianna. So because Bluebird is 1.8 million tonne per annum. That's 120 k's north.
So you're saying there's real mining synergies here, Matty?
There is, mate. There is, and we're going to go through whether this first will be the last offer, who the other players are, both in the senior and junior space. Now, where do you want to start, Trav?
Mate, there's a few talking points there. I like your touch on the Rationale. I think there's also included in that Rationale. You've got Westgold. They've got existing fleet, local stakeholder relationships. Musgrave would avoid dilution in getting development, and they don't mention it explicitly, Westgold, but Wayne did touch on it in that investor call. But one of the I think another Rationale that sort of comes forward in this offer is the fact that the ore at Musgrave gives them the opportunity to effectively bridge some ore production until Great Fingals actually comes online, which they expect that to be FY25, but they think they can get ore from Musgrave in FY24.
And also probably bridges the gap looking even further ahead for the Big Bell Deeps, whether that study goes ahead, whether they start the long hole open stoping below that pegmatite dike. So that's probably way out. That's just a study at this stage. So yeah, whether there's how much, I know there's some exploration upside as well with the Musgrave tenements. Yep. Especially considering the inferred component and what else they haven't found. So yeah, definitely does fill a good little sweet gap for Westgold.
Well, yeah. The first thing I want to talk about, Matty, is the strategy here of going public on this today.
This is your bloody domain, Trav. This is your cup of tea, this sort of stuff.
Yeah, I find it really interesting, right? I love thinking about, M&A strategy, right? Because there's just a bunch of permutations of ways you can do things, but you always try and back solve why did they do it the way they did it and was it effective? And in this case, right, what we saw today was something that came across as a very, coordinated and well executed series of announcements. There was an investor presentation, an announcement. Wayne's done a webcast, and it's quite well executed, and that sort of.
He's coming on the show too.
Yeah, he's coming on the show
on takeover day.
So the execution is really good, right? And that's despite the fact that it's sort of a bit of an unexpected move to have to do this, because it's a move that they appear to have made in response to what looks like a confidentiality. That's been compromised. So the trading behaviour, they think the confidentiality of their offer is being compromised. So they've come out and they've done that in pretty short time, right? And the way that they sort of executed it is, it's interesting, right? So,
but they must have had the presentation ready because they had the presentation to go with it. So it was obviously coming very soon. Whether it was supposed to come out today,
you normally wouldn't.
Early.
Yeah, you look at the investor pres. It's not like a super comprehensive investor pres like you see on a recommended scheme of arrangement where both sides have contributed to it. It's like it's info light, but it's got the Rationale there and some key points just to sort of support their their position, and obviously Wayne could speak to it in the webcast as well. But it still comes across as quite a coordinated way of releasing this, and so obviously they're going about it in a bit of a what is a bit of a relatively hostile-ish approach. So they've obviously had a sit down with the other side on Friday. It looks like last week. And then on, there's trading on Monday. It looks like, news might be out to the Westgold camp. And so they've come out and released on market, an off-market takeover offer. And it, they don't have the bidder statement out yet, but they say that's going to come shortly. And then, all that they really need is a 50.1% acceptance, but it's at a sort of this modest premium, right? It's like, like the 30% premium
before the high trading volume yesterday.
Yeah, exactly. The undisturbed, what they call the undisturbed share price on that one. So, but like you look at that it's like an implicit accusation of unusual trading impacting I wonder if that will impact their ability to really cooperate with the board of Musgrave on this one, because will the Musgrave board accept that characterization? And obviously there's an implication on premiums if they do. So you look at the exact wording of Westgold, right? They say, unfortunately, Westgold considers that the proposal's confidentiality has now been compromised, as evidenced by yesterday's Musgrave share trading volumes, which were approximately 6.6 times higher than the average 12-month daily share price turnover, and resulted in a 6.25% share price increase. Notwithstanding that Musgrave released no ASX announcement, the gold price was lower and Western Australia had a public holiday.
Yeah, which we love discussing.
Yes.
I guess the only part of that where it says notwithstanding that Musgrave released no ASX announcement, but that could be pointing to, I guess that could be interpreted that someone from either party could have release something. Like the long and short, it's I don't see that implicitly pointing the finger at Musgrave.
Yeah, that's right. Yeah,
I could see it as like it's just saying someone involved, where it's some party or third party. Words got out.
Yeah, it's open ended. I guess you're right in that sense. It could be. Yeah, it could, like, if there is a leak, it could have come from any camp. But yeah, I wonder, if you're on the board of Musgrave, do you interpret it as an accusation? And if so, does that, limit your willingness to want to cooperate with them as well? They're all open-ended questions, right?
I think I said implicitly before. I meant explicitly. I'm sorry to all the money miners out there when I say words that aren't right, but you know what I mean.
Yeah.
If people know.
Yeah. And for those who are sort of wondering what the trading activity looked like, we'll bring a chart up now and you can sort of see I've highlighted all of the hourly volume candles that correspond to that day, and what they're doing is they're sort of just comparing the elevated volume that you see on that public holiday yesterday with the prior sort of periods volume on that one.
So Trav, go over the crux of the price, what they're offering, what they're getting, how does it match up?
Yeah, I see this as a starting price, right? Like normally when you have takeover discussions, the very first price put forward to a board isn't the last price, and often you don't see those first few back and forth. There's a bit of a non-binding indicative offer and then rejection, and this all happens behind closed doors, and then hopefully you can have a board recommended merger at a price that's good for both sides. We don't get that in this case, but we get to see what the very first price on the table is. And so this offer has an implied equity value, so an implied valuation of Musgrave of $177 million using the Westgold share price yesterday. And when the Musgrave board evaluate this proposal on its merits, they're going to compare this number to a bunch of other benchmarks that they've got on hand, right? And they're going to figure out, are we getting fair value or are we not getting fair value? And the numbers I think that they're going to point to pretty quickly on this one, well, obviously they've got their PFS numbers, right? So look at the PFS that they put out. They've got, I think, two numbers of interest in the PFS for the Q Gold project. Now, let's keep in mind the PFS doesn't include any value attributable to the exploration ground. It's just monetizing, the Q Gold project there. They've got the joint venture with Evolution there. but we'll get to that. So just the Q Gold project NPV on its own on a post-tax basis, if you run a $2,600 Aussie gold price, you get that's valued at 215 million. And then at 2,950, which is a bit closer to where gold is today, you get 280 million bucks. So 177, which is the implied equity value from Westgold, is a little bit off of that. So that's one thing they'll compare it to. A few other points that they'll compare it to will be, what are the brokers actually valuing? What are the brokers valuing Musgrave at today? And when a broker does their valuation, they'll do a sum of the parts valuation. They'll value the project. They'll value the exploration ground. They'll value the cash and any debt and OPIs and things all in there to get a sort of a target price or a valuation per share there.
So you've got Canaccord's the note we looked at. So that was and the Euros one. So Canaccord actually have if you take away the fact now that they won't need to deploy the CapEx to build the mill, I think they added 30 million bucks on for trucking of ore. So they've got a price target of 50 cents for Musgrave. So they're at the very high end, right? They've got a 50 cent target price on them, and they deduce that 50 cent price target via valuing the Q Gold project at 220 million bucks. They've got $44 million valuation on the Evolution joint venture / exploration ground that they've got, and then there's some cash and stuff in there too. So, and they back all that out on a per share basis and get 50 cents per share. So what Trav, go into that Evolution JV, because Evolution are on the register. I think they've only got 2-3% of Musgrave. What is that JV?
Yeah, they've had this agreement with Evolution for quite a while. It's a bit of a farm in one. I think Musgrave have some degree of free carried interest on a pretty large piece of exploration tenure, and Evolution sort of funding the vast majority of that one. So Evolution's interest isn't per se in what looks to be a pretty small scale standalone potential operation, which the Q Gold project would be. They're interested in the big prize that could come from prospective ground here.
Yeah. Now you've got Euros Hartleys. They've got a price target of 36 cents, so not as high as what Canaccord are pumping. They were valuing the exploration at $30 million, but that's at 2,600 bucks an ounce. So 30, if it goes up to 38 cents for when they're using today's spot price for gold. So both Canaccord and Euros Hartleys well above this current 30 cents offer, which you could read from that first offer plus everything else is probably very unlikely it will stay at 30 cents.
Yeah, and just keep in mind, right, these brokers, for the most part, they're running a model where you have to dilute in order to get some additional capital. I think Canaccord don't do that, but that's why they get 50 cents instead of 38. But Euros, there in their methodology, you've got to dilute because you need to fund it. You need to fund the CapEx somehow. So and when you're doing that, right, you're getting a worse outcome on a per share basis. Obviously, if you have one of these cashed up regional players that has a mill and you don't have to build a mill, that makes things a lot better. So that's what Westgold is.
And I think another one you hear a lot as well is just simply dollars per ounce that they're buying. So I think this deal comes out at about 180 bucks per ounce. So that's from the indicated category, I think. Oh no, that's total ounce. So yeah, some people's like a simple way. So it's because I think someone said Ramelius, they paid about 600 bucks per ounce for that. What was that one they purchased?
Yeah, it was Penny West, but I
not higher grade, but
I don't love that metric, to be honest, Matty, because I think the real value that Westgold is getting, it's the NPV of the study less the capex they got to spend. I like to think of it on a price to NAV ratio. I think that's the better way to sort of think about these things. Comparing ounces at different grades and different strip ratios and all that sort of stuff, I just think it's a bit fraught with fraught with danger on that one. But, it does give you like Musgrave on a per ounce basis have always traded at the top end of its peers. And that's because it's, those ounces are bloody, going to be useful to any one of the mills nearby. They're not stranded ounces, right? They're high grade ounces, and they're also going to be needed at the mills in its vicinity.
So that was $180 per ounce, including the indicated and inferred. I'm correcting myself as I go now to save all the comments and phone calls. So I'm getting quicker at this, Trav.
The other one, Matty, I wanted to talk about just in relation to, the board's going to compare it to these valuations in the market. So what they know the PFS economics are, also what the brokers are valuing the company at. They're going to compare it to that. They're also going to be a bit anchored to historical trading price. So they're going to look for premiums to the historical trading prices. And you look at the share price of Musgrave, and it's sort of on this steady downward trajectory from 76 cents 3 years ago down to where it is today. And so if you're a Musgrave shareholder in that time, you've sort of watched that share price dwindle lower and lower, but you're still a little bit psychologically anchored to those historical prices. And so getting a 30-cent offer can sometimes just feel like a little bit of a slap in the face. It's just if in the back of your mind you're still thinking of the glory days, it might not be realistic that you can really realistically achieve those days. But if your projects become more advanced over time, the share prices dwindle lower, you're a little bit dissatisfied even with a 30% premium if it only gets you back up to 30 cents.
Well, you look at historically the Musgrave chart, like it was all headline at the start, rapid, and then it's just had obviously the big decline off the top, and it's just sort of been that gradual flat to nearly negative decline over a very long period, over about a couple of years. So it's some of those early shareholders that would have been pretty excited. Probably not. And
I'll bring up some of what the retail punters who own.
Oh yeah, what do our mates on Hot Copper think about this? The true gauge of where the mining finance industry is. Good old Hot Copper. Love to you all.
So here's just a screenshot. You can see
YouTube haters.
You can see some comments here, and I'll just run through them. Too cheap. Another one says, happy for a quick hit, but was expecting a lot more than 30 cents. Was thinking high 30s. Another one says, too cheap, try 50 cents. Another one says, I want my investment back plus, and it will take a lot more than 30 cents to get my shares. Another one says, this is a farce, absolute disgrace. So the retail punter is sort of...
the stock standard, this is bullshit.
Never happy with a premium. They always want a bit more. But, they're obviously, like I said, they're anchored to these prior prices a bit. And so... a positive outcome is still a bit of a hard pill to swallow when you can remember the glory days.
So what about getting Westgold scrip?
Yeah. So,
how would you feel about that?
I think it's interesting, right? Like, yeah, I mean, would I prefer like Westgold scrip? So it's a company that's like highly leveraged the gold price, and so if you're a gold bull, there's some upside there if you think gold price is going higher relative to other producers. Would you prefer owning Westgold or having cash and being able to allocate that how you like? I think everyone would always probably prefer cash on that front, but it is going to benefit from the synergies here, and if it's able to acquire it. Is there a read through that they're making this acquisition because they've got a bit of a production hole to fill? Not sure. We can ask that one to Wayne when he phones in. So yeah, I reckon those shareholders would be wanting a bit of a cash kicker to go along with this offer.
Yeah, right. So that could be round two of the offer.
Yeah,
and I suppose if you're a current shareholder, if you're going to say takeover or no takeover, based on this, depending on building a mill and the recent history on successes of building mills and ramp ups and thing, I'd be taking the scrip in a producer.
Yeah, you don't want to build the mill yourself if you're
you don't want to be exposed to it at the moment. Yeah. As I think people have, I think Mr. Keane dropped it, and I'm dropping it to everyone as my own thoughts now. It's cheaper to buy ounces than build them.
Totally.
In this current environment.
Big time. So on your point to shareholders, Matty, like I just got a chart up of who Musgrave's shareholders actually are in their latest investor presentation. They don't have a single shareholder there that owns more than 10%. So that makes a pathway to get control a little bit more simplified in some ways. We'll see if there's a West Minex group, they own 9.5, Jetasea 9%. They'll be pretty big parties to sort of persuade. But there's a long tail there of, what looks to be just retail shareholders that make up the register there. And, we know that Westgold, they owned about 1% of Musgrave at 31st of December 2022. We brought that up in our chat we had with Wayne in the past. I'd be curious to know if they've been accumulating, but, staying below that 5% threshold before actually putting in this formal approach. That would be an interesting thing to see. So
I guess the timing, Trav.
Yep.
Why do you think it's come out this week? You would anticipate that Westgold, and they've been in talks for a while. I suppose we can ask Wayne. There's probably been some DD done already. There's people on that have worked on Musgrave that have worked for Westgold. I assume there is a relationship there. You can
Wayne,
assume.
I'm sure they've done their DD based on publicly available information. But when the question was put to Wayne on the webcast this morning, he said that the engagement has only kicked off at the end of last week. So I don't think they've got access to a data room yet. Or I don't. It didn't appear to be the case. We can ask him that one. But why do it now? I think there's probably two key reasons there, Matty. One is like that theme that you were talking about. How cheap it is to acquire ounces relative to the past. So in Westgold's case, their share price has re-rated, pretty substantially, a lot higher. So it's benefited from the fact that the capital in the ground has been sunk, and they've also benefited from a higher gold price. So, simpler mining, strategy of, less is more, as Wayne talked about, and that's helped them to actually kind of see a stronger share price. So the scrip is re-rated and is worth more. At the same time, these ounces in the ground are not at all benefiting from the higher share price. So, Musgrave, their share price is looking pretty beaten up, right? So just on a relative share price, like relative share price valuation, especially if you're offering shares, it's sort of never been a more opportune moment for them. They've definitely had their eyes on this for a while, right? And you could see that by the fact that they've owned shares. But
and it's funny when you look at the fact that it doesn't matter, as you said, what's in the ground. As soon as anyone has the next stage of building a mill or a building story, its share prices are just penalised for it. And that's probably what's happened to Musgrave. The fact that they're sitting there waiting to progress towards construction to get gold out of the ground, that's just a detriment to the share price in this environment. So, and that's why you'd say that Westgold are capitalising on this, and exactly what other companies are doing, capitalising on companies with a development story.
Yeah, it's a theme, right?
Yeah,
absolutely.
Right, Trav. Speculation time.
Oh, I like this.
Spitball, and this really bloody gets my loins tingling, this sort of shit, mate.
Oh, yeah.
Who else could possibly come to the party if? So let's have a look at who's in the region.
Yep.
We'll go to the big dog first, Ramelius.
Oh, yeah.
Now, interesting, and I didn't even know the size differences between Ramelius and Westgold. I just had it in my head they were very similar, but the fact that Ramelius is actually twice as big as Westgold by market cap, 1.44 billion. And you look at their
production profiles is pretty similar, right?
Yeah, well, very, very similar. So look, what do we got? Westgold, they put out 270,000 ounces last year.
Yeah.
Guidance this year is 240 to 260,000. They've got a 757 mil market cap. Ramelius, they put out 258,000 ounces last year, less than Westgold. Their guidance is 240 to 250, pretty much exactly the same as Westgold.
Not all ounces are made equal, Matty.
Exactly.
Some ounces make more cash than other ounces.
And it's simply that you pointed out, if you look at the 5-year history, Westgold have issued about $200 million worth of new shares in that 5 years. So majority raising, I'm sure there's some options that have been exercised there. So
I think they had, big capital plans that they had to, obviously had to deploy some capital to build, but and at various times there, the gold price environment was dipped below, and you sort of had to plug a bit of a gap there if you wanted to meet your capital investment plans, right? Yeah.
And then you look at Ramelius for the last 5 years have only issued 1 million shares.
That's probably just from exercise of uppies.
Yeah, exactly. So no raisings, no
incentives.
lossings. So a lot different dilutive that way. And I think they're in pretty similar cash on hand positions as well. So if you look at exact same profile, but the difference in dilution and the company's double the size. So
So Ramelius, they're an interesting one, right? And they're the logical other party to really have a crack here. Their Checkers mill is 40 kilometres away. You know, that's their Mount Magnet operation, and so they had that mill there. Checkers was used to have ore being trucked to it from Vivian, and that stopped in January, and they've now got that Penny West coming online, and that's being hauled there. But you look at Penny West, it has only has a reserve of 490,000 tonnes. It's really high grade, right? 15 grams per tonne, but there's only 230,000 ounces there. And Checkers, it's a 2 million tonne per annum mill there. So it's going to be pretty hungry. And if you're feeding it, if you're topping it up with high grade oil, that doesn't make it less hungry. There's still latent capacity there. So they're going to have good production profile out of that for a couple of years, thanks to Penny. But that's gonna roll off pretty damn quickly there. So, and
looking at the Euros Hartley's note on Ramelius, so they took out of their model that there was going to be a stage 3 cutback at Edna May. So they've got Edna May finishing in FY25. So their model from FY26 onwards has a big drop off in ounces. So Ramelius definitely have a void to fill at that point. Yeah,
they're trying to plug that with they've obviously now acquired both Apollos like Rebecca, and also now Breakers row project there, and they've obviously talked about the plans of a combined operation, a third hub utilizing those two deposits. So obviously they've got a plan to fill that production gap with that. It's early days there. We don't have much guidance on what that could look like yet, but they've now got control of both Breaker and Apollo.
Yeah, but then you've got Carasoo Dam just north of that.
Yep.
Northern Stars Carasoo Dam.
Yep. Which is probably less important to them these days.
Yeah, so they've put a lot of capex into the super pit upgrades and a lot of capex into the Thunderbox upgrades. Thunderbox, I think that's 4 million tonne now. Carasoo Dam's sort of sitting out in that region north, so could be a little bit happening in that area. I'm sure there's been some discussions. So whether Ramelius would look at this as an option, to fill that future void, or would Carasoo Dam, because buying Carasoo Dam gets that
saves
mill,
the capital,
gets that mill, and does it that way. So whether they see, but as you said, probably the most logical one around here, or look, even you spitballed, would Ramelius.
Oh, mate, I'll touch on that later.
Oh, geez, stay tuned, money miners. Are you going to
save the best hypotheticals for last?
Are you going to hit Wayne with that one?
No, it's down. You scroll down, you can see.
Yeah, right. We do have notes. Sorry, money miners. Right, so that's Ramelius. So that's will they come to the party? Yet to be determined. Adamant.
Yeah, Adamant. So they've got the Kirkalocker. It's in trucking distance, but this thing's been in administration, I think, since 2021, and you can't get any good information about it. So I just put a line through it. Don't have funding capacity. Don't know what's going on there. I'd love for someone to tell me an update about what's happening with Kirkalocker and Adamant, because I've just heard literally nothing since 2021 on this one, but just put a line through them.
And then you've got Gascoyne.
Now,
so this is an interesting one. And as you said, look at this, the million ounces of resource that Musgrave have got with no mill, and they're getting offered 177 million bucks, probably less.
They have a million. I don't think they have a million ounces.
Yeah. If you indicated and inferred combined, is 982 or something.
Yeah.
Let me guess.
Yeah, you're right. Yeah, that rings a bell.
All about exact. 927.
Yeah.
Sorry, 982.
But stage one of the PFS, it's not that much, is it?
Yeah, because a lot of that's in the inferred component. Okay, so then now if you look at so they're getting offered 177 mil. So I suppose you take 10% off that, because Westgold have dropped 10% today. Mm-hmm. So the implied value is probably 160. Now Gascoyne, so they're capped at 140 million at the moment. They've got a 2.5 million tonne mill. Trav did say a while back, like Musgrave are actually capped higher than Gascoigne.
They still are, yeah.
And they were. So it's like, well, what
I think
Musgrave could have taken over Gascoigne.
I still think they should have, to be honest. I mean, yeah. Like,
would have it been that easy, Buck?
Like, it would have been pretty hard. Like, it would have been easy back then because Gascoigne were bloody desperate. I would have thought it would be not as hard back then. But
I suppose the shareholder base is the big one here.
Well, things are a lot cleaner now, right? The mill's turned off, so you don't have to worry about the issues with losing money at the operation there while Never gets drilled out. But now the mill's off and they're drilling it out and they're funded to do so. It looks a lot like it. But Gascoigne, it's not like Gascoigne can come in here and put in a competing offer for Musgrave. I think there is a potential alternate scenario, which again I'll touch on a bit later on, Matty. But in terms of like, there's a mill there, but it's not capped high enough to actually put in a competing offer here. But I do have another theory that could happen there.
Oh, geez, I'm so keen to get there, Trav. Silver Lake have been in the news, Trav. So they've got the deflector. So that's even further west. I think it's like 600,000 tonne per annum, that mill. It's a lot smaller. So
exactly, still
they're balls deep trying to get Gwalia.
Yeah.
So you can nearly scratch them off, I think, and probably not as short. Like I think they want quicker ounces. Even though Wayne said that this would anticipate to come online within 12 months. Bit more trucking out to.
Well, I think they're, if they have a production glut, it's sort of Mount Mungo would be the focus there rather than deflector, and it's like the synergies are less compelling because it's the furthest trucking distance of all of the neighbouring mills, to the best of my knowledge.
Yep. Final Evolution. Yeah,
so Evolution, they own like 3% of Musgrave, but I think their interest is the JV exploration upside. I can't really see them coming in here for a corporate play. And
I think it's not big enough for Evolution. So they were in the news today saying that they need more assets, and they're talking about getting assets out of majors, bigger assets. They've obviously put a lot more. They're doing a mill expansion at Gungari. Is that how you pronounce it?
Yeah, I mean Mungari. So they got
$250
million expansion announced there yesterday.
They got the expansion. They're going deeper at Ernest Henry, so they paid $700 million for that, 70%. So I think they got their hands tied up, and this is probably a bit too on the smaller scale.
Exactly, Matty. So yeah.
Now let's get on to how the market's reacted, Trav. Market reception.
Pretty interesting, Matty. So Westgold, they're down 4% today. And I find that's a sort of interesting share price movement because on the webcast with Wayne, someone asked him, what's the IRR and payback? And he goes, can't tell you those numbers, but safe to say it's very accretive. So if there's a potential for them to do a very accretive deal, why is the share price traded down? I think there's a potential that some of the market might have a read through that, is there a sort of, a bit of a production gap to fill that they weren't super sure about before. That is the read through the reason they're doing the deal is to plug a gap until Fingles comes online, and would it be bad if they didn't do a deal? So maybe the market just thinks there's more information about Westgold to the downside that they didn't know about before. I'm not sure if that's fair or not, but the market sort of trading them down 4%.
Because how does it work, Trav, with when they're issuing these shares? So they're issuing $170 million worth of shares, Westgold shares, to give to Musgrave, but they're getting that asset. Does the share price usually not go down by that percentage, or different to an equity raise because they're getting the asset? Is that how it works?
Yeah, different to an equity raise. Because in an equity raise, share price will go down because their come raise, the market is anticipating they have to do a raise at a discount. So there's an arbitrage opportunity there for the hedgies. So the share price kind of leads that trend. In this case, it's a scrip deal. If you're doing a creative deal all scrip, you should actually re-rate higher because you unlock these synergies. So the deal's far from done. So it's sort of TBA on that one. But the fact that they traded down 4%, it's an interesting thing.
They were down 10 at one stage.
Oh, pretty volatile.
Pretty sure today. Yeah, they've recovered a bit. Unless the market think they're paying too much, which I don't think couldn't be the case in this environment. No. You wouldn't think.
No. Speaking of market reaction, Matty, Canaccord, they put out a bit of a note in response to, this market activity today. They've got a 50-cent target price already on Musgrave. And to quote, a couple of lines in that note today, they say 50 cents would seem a fair price in our view. They say, given recent media speculation and the fact that Ramelius operates the Checkers Mill 40 kilometres away at Mount Magnet, we wouldn't write off a competing bid in due course. So, it's interesting, that one there. Like some of the market commentaries has certainly been that, current price is sort of too low to fair value. And we talked about the hot copper commentary that sort of, coincides with that. So it'll be interesting to see how Westgold try to persuade shareholders on that point. I imagine what's really going to happen is there'll be another bid put in that offers better value in due course.
And as I said, maybe a little cash component sweetener.
Yep.
Yeah, but absolutely. That's disregarding if another party comes to the party.
Yep.
So
that'd be the
as
best
I said,
outcome.
they're down. I just checked again then, close at 10 to 2, down 10%.
Westgold's down 10.
Yep.
Wow. Yeah,
$1.44.
Yep.
So, right, now the juniors, Trav. Juniors in the region.
Yep.
Other players. So this is on, I guess these guys, Musgrave are on the senior end of the juniors in a way, because they're pretty well
something
advanced.
indicated, yeah. So, and it's like, I think, like if Westgold's down 10%, then is the market thinking that they need to acquire ounces? And if the market thinks that, then naturally my brain goes, who else could they acquire if that's what, if that's the bigger picture here. And there's two companies that definitely come to mind to me, Maddie. Number one is Alto Metals. They're actually up 5% today. Westgold, they already own shares in them. I think it's around 10%. And it's been Alto's been of corporate interest in the past. I think they've had takeover offers from Adamant, Middle Island, Gold Sea, Habrock, and they fended them all off. So you just keep your eyes on that one, I reckon. And the other one flies under the radar a little bit is Great Boulder. So, they've got their Sidewell project. It's only 25 kilometres from Westgold's Bluebird. It has a 2.6 gram per tonne, 518,000 ounce resource, and it's growing. It's like I said, it's a bit under the radar there, but it's got a $38 million market cap.
So you're getting, it's one of those stories like many others out there that are just, getting visible gold intersections, high grade intersections, but just in this market, a lot of these juniors are just getting absolutely no love at all.
Yeah.
Really.
But the value of those ounces is bloody hell of a lot higher if you can see it just feeding an existing mill.
Exactly. So they're pretty. Everyone's just sitting there waiting to be taken over at the moment. Really. So right, what happens next from here, Trav? 51% approval rate, acceptance needed here.
50.1. Yeah.
50.1. I'll say 51.
Yeah. Speaking about the relative valuation metrics there that we talked about up the top end, I doubt the board will come out here and just accept this value. They'll play straight that and knock it back and get the uplift in valuation.
Because why would they?
Yeah.
Why would they say no?
Yeah,
why would they say yes? Like
totally.
You have to test the market to some degree, wouldn't you? Super
rare you see a straight out yes. I mean, remember, the only one that I can bloody remember in recent history was that Mincor Wailu one, and the only reason they got a yes is because after the offer, but
BHP
before they come out,
handed them a gift.
Well, yeah. I mean, they come out with this operational update and things are dire, and so if it wasn't for the Wailu offer, the share price would be a hell of a lot lower. So it was I mean that, and then they come out with recommended acceptance. You just rarely see that, right? Like you'll get a recommended rejection here, and the real question is, does someone else come into the mix knowing that Westgold's there and thereabouts? And the other question is, how high do Westgold go in value, and what value gets Musgrave sort of to open up and facilitate DD? All of these are sort of questions that will unfold over due course. But now that it's in the public domain, it'll all sort of play out relatively quickly. I would have thought. What do you
think about timing from Westgold? It's like, say you got Ramelius. Well, Ramelius is takeover of Breaker has gone through. You got Silver Lake in the midst of the attempt to get into Gwalia, so that'd be perfect timing is to do it when other people are trying to do deals to take other parties out, wouldn't it be?
Yeah, you could argue that it's somewhat opportunistic. I think it's also opportunistic just from a relative share price perspective as well. But like that's what makes M&A kind of fun and accretive is if if you time things well and all that sort of stuff. The other thing that sometimes you see with opportunistic M&A is if they lob the bid after the MD's just left or something like that. But they've done that.
Well, they've definitely been, because they could have done this a while ago, I assume, but they've let this pan out as long, and the Musgrave share price has suffered due to being in this market with a development story. So it's like they've dragged it out. It appears, I reckon, they've dragged it out long enough to get the best value because they know they're going to probably go up from 30 cents and they're not going to take the offer.
And from Westgold's perspective, they got access to a bunch more information when that PFS came out, and that was only like 6 weeks ago or something. So, when that PFS came out, there's a whole bunch of new information that you sort of feed into your internal thinking and valuation. I'm
sure they could have just gone and had a coffee and asked him directly, eh? Bloody, because who wouldn't want to have a coffee with Wayne? What a bloody legend. I love the bloke.
Yeah.
Right. Now, what's your bloody left field thoughts, Trav?
So
I wanted to get there earlier, but
these are three absolutely left field hypotheticals, and I think let me just say up front, super bloody low probability on all three of them. But
these are 99% not going to happen.
I just want to talk about them because you can make the case just from a rationale perspective. There's trouble to doing any of these deals. Like they're tricky to pan out, but just bear with me. I want to talk about three super low probability potential hypotheticals, Matty. Number one.
I'm going to rate these 1 to 3.
Could Ramelius buy Westgold?
Well, based on the bloody market cap, as you said, double the size market cap.
Yeah. So they're pretty distracted. They're obviously focusing on a different growth area. But yeah, if there are sort of some synergies to be had in that Murchison area, they've got the Checkers Mill there. If there's an avenue to get hold of Westgold and also Musgrave at the same time, then do you unlock a bunch of synergies there that aren't even sort of talked about yet? And then does it position them in a really good position to actually then consolidate, with Gascoigne and other neighbours at the same time? And you've got a bit of a Murchison hub, similar to what RAL is trying to do with Leonora via Genesis, is consolidate Leonora. Can you have a party consolidate Murchison? I think that's what Westgold's probably trying to do, right? Which leads me to my second hypothetical.
But wouldn't that first one, Trav, what's the benefit in doing that if you're buying mines and mills like that? Is it because it seems a lot of the M&A is like buying a mine or buying somewhere with a mill to suit your mine?
Well, do you remember in the slide deck for the rationale with Genesis acquired Dacian and also these Leonora assets from St. Barbara, you've just got the ability to reconfigure your mine scheduling, certain pits going to a different mill, which maybe saves OPEX along the way. Instead of using the stockpiles here, you can actually have, this other pit that's already got to cut back, and you just get, more value to shareholders that way. You lower your trucking distances, you have scale in all of your logistics and back end and all of that sort of stuff. So I think there are some substantial synergies if you have a bit of a regional hub going on.
Right. This one looks out there.
Yeah.
But I'm sure there's some thinking behind it.
Yeah. So could Ramelius sell Checkers to Westgold? So if Ramelius, if they're all, if they're sort of thinking about this new hub with, the Apollo Breaker area there, then does Checkers have as much, like importance in their long-term future, or would they actually contemplate selling it to Westgold and allow Westgold to become that party to consolidate the whole Murchison area and benefit from those things that we just talked about?
But what would they do with the Mount Magnet, or then they'd have to sell that as well?
Oh, sorry, when I say Checkers, I'm talking about they
sell that,
all of their Mount Magnet operations. Yeah.
Oh right.
Yeah. So
right. I thought you meant sell the mill.
No. You got to get Penny West and all that sort of stuff as well. But yeah, like imagine that, right? yeah, like again, like pretty low probability, and in a deal like that, then Ramilius would probably end up having to get Westgold scrip. Do they want Westgold scrip? I don't know. So again, it's a pretty out there thing, but another thing to just weigh up as a left field hypothetical for me. And the other one, I was just, I've obviously talked to you before, Matty. I said how Musgrave should have just bloody bought Gascoigne. Saves them having to worry about a mill, and they get to own most of the company because of the relative valuations between the two. They're a bit more equally valued these days. And Gascoigne just looks a lot more de-risked because it doesn't have a mill that's losing money anymore. So, could you see Musgrave, think that there's a better value in just doing a merger of equals with Gascoigne here?
You'd have to get the Tembo ticker of approval, eh?
Which is pretty tricky. Tembo's there at 20%, and they'd have sites higher on a pretty substantial multiple. But Tembo, if it's a merger of equals, maybe Tembo can actually think that there's accretive value to be had in it. But yeah, there's a bit to play out there. Again, it's low probability because of Tembo, and because you got to ask the question, why didn't Musgrave bloody do this deal before? It was probably just because of the risk, but that risk might have been gone now. But
I think Lawson was pretty adamant that he wants 100% of never. That's how this whole thing was structured.
Yeah, but they were stressed.
He took for it.
You probably had the ability to do a different deal if someone came to the party at a better price. So,
do you think it is equal spot? It's first pass. I'm like, please fill in the gaps for me, anyone that's listening.
Well, Musgrave is valued high. I call it a merger of equals. I'm not saying
but
the actual value is equal.
Do you think Musgrave, with these thicknesses and widths that Gascoigne are hitting with the 2.5 million tonne mill, and compared to what Musgrave have got, it's like a lot of it's inferred. It's a 15.7 or 15.6 stripping ratio for the pit. Is it?
Our job is
not. It's like the equals are the other way.
Yeah. Well, our job is not to tell the market that they're wrong, because that's a bloody.
They must be. Please tell me why I'm seeing that differently. But I just think what I'd like long term shares in, maybe, don't know. Anyway. First pass. Maybe Simon rings me too much.
Well, I mean, and the other thing is, you put the two of them together, and do things even look even better? The ability to mix the ore, do you get a better blend? Does that help? You're putting less of that low grade Gilby pit into the mix.
Yeah, we got that right. Sorry for getting that wrong the other way. But speaking to a bit of a fundy the other week, I think this was actually Mr. Dallio. Mm-hmm. Talking about what is attractive for majors looking for this M&A at the moment, and I guess the comment was around, instead of looking at say Musgrave by itself, they would rather see exactly your point 3, a Musgrave and Gascoigne merge and get a bit of a bigger and better story, which then becomes a lot more attractive to a bigger company rather than looking at Gascoigne individually or Musgrave individually, just for this example.
Totally.
So it's like that, M&A on the smaller scale will then lead to M&A on a much bigger scale. Yeah. So that's sort of the investment that they were looking for.
And the theme in gold M&A at the moment is this regional sort of consolidation theme and having these regional hubs. So I'd love to see the Murchison have a bit of a regional consolidation and have someone just have super efficient operations and mine scheduling and all the rest in the area. And I can see sort of the whole pie kind of all accumulating to one player. It's just who's that player going to be? We'll find out in the future.
All this M&A, Trav, there's going to be some empty fucking offices in Perth City, mate. Jesus Christ.
Yeah.
Half the amount of mining companies the rate we're going.
Yeah, exactly. Yeah. Oh, we'll have jobs, mate. We'll be able to talk about the deals.
Yeah, no, we'll move in on a cheap rate. Righto. Now, great analysis, Trav. We've done our little first pass, and unfortunately, Wayne doesn't get to listen to it, so you don't even know what to rebut to, Wayne. Welcome to Money and Mine again, mate. How are you?
Thank you for the invitation, Matt. Happy to be back.
I'm loving this, Wayne. I think, having an MD come on a podcast to talk through a live deal before there's a board recommendation, I'm convinced that this is where M&A is going.
This is the new friendly face of M&A.
friendly face. I love it. Yeah, we'll hopefully Luke Tonkin can take some guidance and come on our show as well, and encourage some friendly fire from Genesis and St. Barbara.
You're setting the gold standard, Wayne.
Well, look, Matt and Travis, the only reason we launched today is because you guys have run out of material with the other M&A that you're in love with. So we've had to provide some more stuff here to work with.
Well, Wayne, we've done a bit of our first pass analysis on, I guess, Westgold, Musgrave, and then other parties that might come in. As you said, you've released it today. A bit of high trading activity yesterday. Just give us the overall scope and strategy, mate, and where this is going to fill any little ounce voids for Westgold.
Yep, really straightforward for us. It's just substituting low-grade surface stocks that we've been processing for shallow, high-grade open pit feed. I mean, we've got 2 processing plants one within 40 Ks, one within 120 Ks of the Q Gold project, and the Musgrave team have done a fantastic job to get it to this point. All we're doing, looking at this, is really as just logical, pragmatic consolidation of an ore body with existing milling infrastructure.
Mm. Now, they've only got a resource at the moment, Wayne, indicated and inferred. Where do you see the risk lies once it's a very high-grade resource, 10.5 gram resource. Where do you see the risk once this gets converted into reserve with these thin undergrounds? Yeah,
and look, the open pit, will that be the grade? Don't know. More drilling will tell. The underground, we don't have enough data. I mean, all our assessment to date's been done on public data, so we don't have a full picture on what this thing could look like. Look, we're optimistic. There's been the quality of the work that's been released to the market is very good. The PFS is quite detailed, but there's nothing like looking at the raw data to come to a fully informed conclusion.
Wayne, can you talk us through the kind of like how events have sort of unfolded? I'm guessing it was Friday that you submitted what I'm assuming is just a non-binding indicative offer and requesting access to DD, and then did you hear anything back over the weekend?
Look, that's the timeline, Trav. The intent was that to do this in a quiet, friendly manner. The unusual trading yesterday really meant that we had to come out and basically blow the lid off this thing. Still want to do this in a friendly manner, and I'm sure the Musgrave board and the management team are keen to do it. To at least have that, at least to engage positively, which I guess positive engagement's been words that you guys have been using quite regularly in recent
or
podcasts.
Lack of.
As long as you don't start, pasting leaked emails in announcements, I think you'll be right on the positive engagement.
Not going there, Trav. I like Robbie Waugh and the team too much to be doing that stuff.
Make sure you use VWAPs and everything to keep Trav happy, mate.
Mate, we've got an undisturbed share price. It might be disputed here, so we'll wait and see. There could be a point of contention in the future. So that's interesting. I mean, given what looked like yesterday to be a potential, like the confidentiality may have unfortunately not been upheld, but it could have been on either side. No one really knows, but and this could just be conjecture as well. But given what looked like a bit of normal sort of trading data, you guys have taken a different approach to what Plan A was. Instead of coming in the front door and hoping to have a recommended deal achieved on both sides at a value that's appropriate, you come out public. And it just from an optics perspective, the execution in a short period of time, it looks well executed, right? Like you come out, you've got an announcement, you've got an investor press, you've got a webcast, you're jumping on the pod. So the turnaround time, was this something you potentially anticipated could happen, given sort of how sort of prepared you were for everything?
We're sending high fives, Wayne.
Yes, and people forget we've been an investor in Musgrave for many years. So I mean, we are neighbours in Q, our office and queue backs onto their core farm. So if we finally get together, it'll stop, our guys looking over the back fence every day. So yeah, we're all prepared for this thing. Absolutely.
And where's this fill the void? I know you've got great Fingal come along. You've got some great results coming out of there. And we did chat with you earlier in our Money of Mine days about the Big Bell Deep study and everything. So is this really going to fill that void of great Fingal? I know you said on the webcast today you expect production out of the 12 months. Is that one of the main drivers for this?
Very much. I mean, we can see the Q Gold project or coming into the mix in FY24. I mean, it could be a 6 to 8 months and we can be mining this stuff. So having these ounces hit our production profile, FY24 will push the overall group grade up and the all-in sustaining down, and that's where we want to be. Basically, a more profitable operator.
Wayne, I'm pretty keen to get your read on the regional sort of interlopers. It's a hotly contested area. Plenty of mills to go around. Ramelius screens as the obvious sort of contender, and if there is one, how are you guys thinking internally about the potential for Ramelius to express some interest here?
Look, Ramelius, fantastic company. They do a lot of things really, really well. If they like this thing, well, there's nothing stopping us. Stopping them from coming in over the top, but we'll just run our own race on this thing, do the work, and if someone wants to pay more for it, well, then that's how it'll fall.
You'd have a few aces up the sleeve, eh, Wayne?
Oh, I don't know, Matt. I mean, we're just going to play a straight bat with this thing. I mean, the logic behind it makes perfect sense. I mean, 40 Ks from Tuckabianna, it's the natural home for this ore. Building another mill in this area when it's already well serviced with processing infrastructure just doesn't seem like a very efficient use of capital.
Yeah, we did say earlier, anyone with any development story, their share price is heavily penalised because nothing is really a development success at the moment when you've got to build a mill.
And it's a tough gig. I mean, being a producer is a hard game. Being an explorer is a hard game. Taking an explorer to become a producer, I mean, that's a really difficult road, which there are too many stories of in the market every week showing, the problems of capital cost, schedule blowouts, and all the other attendant issues of trying to resource projects in Western Australia at the moment.
Mm. So Wayne, just have you been following some of the broker commentary in response to the offer?
Yeah.
What did you make of the Canaccord note that went out today, sort of saying, when you factor in the synergies, not having to build a mill, then fair value of 50 cents seems appropriate. What do you think of that?
I think there's some detail in that note that people should read.
Oh, what page?
No, Matty, you and Travis have got a bit more time this afternoon. It's raining outside.
Oh, mate, Matty's got a 2:30 meeting, so I got to have to do it myself now.
Oh God, and I'm subbing in for JD on the technical stuff, Wayne. So yeah.
Look, again, I'll give you a hint, Matty. It's more around the banking and finance part. So Trav may have to do a bit of a dive into that.
Oh, that's very good, mate. Now, mate, timeline. When's in terms of the big offer? Them giving it yay or nay? What are we looking at?
Look, we'll engage with the Musgrave management and board soon, but we're well prepared here. Really like to do this in a friendly manner because I think the logic is compelling for both groups. This is not a win-lose situation. This is value accretive for the Westgold business. It basically sidesteps a whole risky, dilutive and long path for the Musgrave shareholders. So in both groups of shareholders can benefit here if we get this party started.
Is this the big, before you go, Trav, is this just a big ploy to get Anthony Buckingham with a Westgold shirt back on again, mate? The genius?
Matty, you know a bit too much about the lineup here. Look, AB was the COO here. He knows our assets quite well, and let's see.
It's hiring talent and an asset. I like it. So Wayne, speaking of the shareholders, do you have I mean, I imagine the journey for those shareholders has been, a little bit dire. The project's become more advanced, and there's a bit of clarity that it's worth $1 or $2, but the share price has dwindled. So copying a market standard 30% sort of premium only takes them to 30 cents, but they're still anchored to these higher prices historically. What do you think about the ability to persuade those shareholders to accept the offer at its current price?
Oh, look, we'll do our best, but what we've done effectively today is really put two tangible options on the path. One option is to stay wholly owned as Musgrave and basically go down the path of becoming an explorer that transforms into a producer. I mean, that's got a timeline. That could be 2, 3, 4 years, who knows? The financing and approval process around that, who really knows how long that's going to be? But that's not a today exercise. Conversely, the shareholders can, if they love this ore body, which they clearly do, they can see that ore body mined and the gold coming out of it within 6 to 8 months.
Very good, mate. Well, Wayne, I reckon now, because we'll be on the blower to you all the time, because once you pick up, we don't leave you alone, mate. So as Trav said, we'd really appreciate you coming on Takeover Day.
Absolutely.
Look, I'm just happy to be able to provide a bit more material for you guys. I mean, you're doing fantastic work up there in the northeastern goldfields. I'm sure all of those other MDs you mentioned are really happy that I've taken the focus off them today, and that we're back into the Murchison.
Mate, you're making them look shit coming on Takeover Day, mate. So,
if you don't
gold
mind,
standard.
Just the new friendly face of M&A and Westgold in WA, all that other stuff. Who's got the bandwidth for that?
And mate, if you don't mind lobbing a new offer on a different company every day, then we'll happily talk about you every day as well.
Look, Trav, I'm not sure that's going to happen. I think in football vernacular, one week at a time.
Yeah, you would say that. You don't want to pump their share price up too much before you lob it another deal.
Look, this makes good sense. I think the logic is sound. It's logical. It's pragmatic. The challenge now is to convince the Musgrave board and shareholders that this is a better option.
Too easy, Wayne. Mate, well, thank you again for coming on. All the best. Hopefully you're friendly enough with them that they don't up the price on you, but we'll wait and see.
That's right. Great to chat, guys, and fantastic work. This is a great forum. It's making the whole resources game a bit more tangible for many, many people, so keep up the good work.
Oh, we really appreciate you making the time, Wayne, and hopefully it can be more fun with more crazy deals to talk about.
Listen, always happy to chat. Go well, and thanks for your time today.
Good on you, Cobber. Cheers, mate.
See you later. Cheers. Bye.
What a ripping bloke. He's up there with one of my favourite MDs, I reckon.
Yeah, mate, first MD to phone into the potty.
Ever.
And now he's the first MD to bloody phone in amid a live M&A transaction. So I think he is absolutely setting, he's a trailblazer right now in terms of how to kind of communicate with the public, with shareholders, and also mid-deal. So. And
there's nothing. I know it's all friendly, but there's no angst about everything. He's very professional, transparent. Got a lot of bloody time for Wayne.
Yep, good bloke.
Great bloke. Gold star, Wayne. Kudos, mate. Righto, recap of other news, Trav. Now, the SPAC, Metals Acquisition Corp, the shareholders approved the business combination, which is the acquisition of CSA and the shareholder vote. So it looks to be all systems go for Mac now. Keep your eyes peeled for this ASX IPO. I'll throw the message out to Mick McMullen. We've still got to trying to get him to come on to further expand on the Mac SPAC and give us a bit of insight. They corrected us on, we incorrectly said that they hadn't tipped in any money, but they've tipped in a shitload, him and the big dogs. So I'm sure he'll come on and clarify all that. Now, South 32 have rumoured to be looking at the Comicow copper mine. Well, probably bloody said that wrong too. That's it. Comicow, isn't it?
Oh, it's close enough.
That sounds good. In Botswana, and have appointed RBC as advisors according to the AFR. So,
pretty interesting,
bit happening here.
Yeah.
We were going to do the whole story on this today before Wayne interrupted us with his takeover offer.
Yeah. I mean, look, it's South 32. They've got this strategy to increase their copper exposure, and they consider it a bit of a priority. I think I read somewhere it's like 8% at the moment. But yeah, I mean, like they're clearly keen to grow that, and they're growing their future-facing commodities percentage of their commodity portfolio over time. So keep in mind, like the whole process to acquire Comacao, Sandfire, they're probably in the box seat for that one, because they've got their Mateo mine in Botswana that's coming online right now. They've been building that for years, and so the way I'm thinking about this now is, if South 32 are really interested in Comacao, I wonder if they are ultimately going to have a run for Sandfire. So keep in mind as well, Matty, Sandfire's new CEO, Brendan Harris, comes straight out of South 32. We saw, in South 32, right? They're the spin-off from BHP. BHP just gobbled up Oz, the biggest copper miner. Is South 32 going to do the same thing?
God, they might. It might be a Newmont similar to what Newcrest was the spin out of Newmont. Newmont sold all the gold stuff in Australia. Now they're buying back Newcrest. This might be what BHP might do to South 32.
Oh, I love Jeez, those are the best deals for bankers. The merger, the demerger and merger again.
The re-merger.
No, I can't see that one happening.
Yeah, no. Might be a bit more likely to some of those other hypotheticals. No, definitely not. That's definitely unlikely. Callium Lakes, KLL, have been suspended from quotation, still pending the release of an announcement regarding its operation at its Beyond sulphate of potash mine. GG, love a good bit of SOP, Trav. I love it. I've got to get a watch list for this. Yeah, Can you set me up a potash watch list of mineral sands?
I will do that just for you.
It's a void in my life.
Yeah. Oh, this one's not a good sign, Matty. Just hoping shareholders have some news about what's going on here shortly.
Right. Bowen Coking Coal, BCC, has completed $40 million placement and $10 million share purchase plan to be applied to CapEx at its Burton complex. Now, I've also proxy advisory firms, ISS and Glass Lewis have recommended shareholders vote for Hudbay's merger with Copper Mountain Mining. So Copper Mountain's primary listing is in the TSX, but it does have a secondary listing on the ASX. So once the merger completes, it will be delisted from the ASX. So the current ticker there is C6C.
So that's another copper producer off the ASX boards there, Matty. Osmineral's gone, Copper Mountain Mining gone, MAC set to come on soon, we'd think now. So, but yeah, there's not many of these ones left, Matty.
Yeah, I agree. I was about to say something, but you just already said it. Right, Patriot Battery Metals, Trav's favourite stock, have had to cease field activities per the request of the province of Quebec due to forest fire risk in the region. And I think, have you just copied someone's tweet here?
Yes.
I saw this tweet.
It's a great tweet.
Were you going to use that as your own comment?
I might cut this bit out now. I feel embarrassed.
Righto, let it out.
I'll correctly attribute the tweet now. Mate, I do top tweets of the week. I give attribution.
Oh, he's been caught with his pants down here.
I'm cutting this out.
Oh, well, there was a tweet that Trav was going to claim that was, luckily they can still advance the camp construction activities and process drill core photos.
Yeah. Yeah. Exactly that one. Very funny.
Right. Tomorrow's episode. A hot bloody bolter that's happening at the moment at WA1. The niobium play in middle of bloody nowhere.
It's a lot earlier stage than companies we would normally talk about. So we've been.
But it's got the hype.
It's got the hype. It looks pretty serious, and but I was a bit nervous talking about it, Matty, because I only know bloody cash flow, and mining, and this is bloody geology. So we've had to recruit an expert panel to walk us through what's going on at this one. I think the listeners will be pretty interested in it.
I might just sit on the edge and vape and have a beer.
Well, hopefully they ask each other questions, and we don't have to look silly in the process.
Yeah, love it. Right, Trav, good work, mate. Thanks again to Wayne out there, mate. Mr. Bramwell coming on. Love your work, mate. Great friend of the show.
Excellent stuff, mate.
Oodoroo, money miners. Cheers.
Oodoroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.